Amid all the concern about a more hawkish Fed in the market, there's been little consideration. Can the Fed actually pull off a soft landing? For that, we're going to get to senior economics reporter Steve Leisman takes a look at how the Fed could pull it off. I like the optimism. Here, Steve.
You got to give the idea a chance. Okay, so let's walk through this. Fed Chairman Jay Powell in his press conference emphasized, of course, the inflation risk and the uncertainty over how much the Fed will have to do to address it. That freaked the market out. But he still laid out a path where price increases could come down without the most drastic measures. That is, the Fed not doing much more than it would otherwise do to normalize policy. Powell mentioned 4 factors that could combine to help ease inflation. 1, the Fed tightens. That's got to happen, but at least just modestly at first. That is, just normalizing policy. The supply chain issues begin to resolve over time, this year and later to next year. The virus impact eases. And fiscal drag, which coming off of the big spending last year, helps restrain the economy.
I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse in all likelihood. So, but monetary policy will do our job.
Now, Powell repeatedly said that the job market and the economy are strong. He believes it's possible to tighten policy without doing damage to either. A key here is going to be, by the way, a bounce back from the economic weakness we're going to get the next couple months this winter brought on by the Omicron variant. So it is a best guess for now. The Fed approach to tightening policy will begin with steady rate hikes, faster, but at least initially not much more than the Fed would do to normalize policy if it was doing it anyway. Then you get balance sheet reduction. It goes on autopilot and runs in the background. The Fed will only escalate if inflation does not respond to all this and decline. Powell made clear he would act if inflation did not respond to the initial set of policies, but that does not appear to be the first impulse of the chair or the committee. So a soft landing, not out of the question. I'm not sure it's Powell's first forecast there. It just needs a whole lot of help from other factors, and with luck, not much more tightening than the Fed would otherwise do, Andrew.
And how would you handicap that? If you were to put a bet on that, what's the percentage that it actually...
You know, Andrew, can I claim a little bit of humility? I didn't see the forces coming together that led us to this inflation where we are right now. And I'm going to be a little bit humble in saying I understand how they're going to work themselves out. I thought the initial Fed argument of transitory made a lot of sense. I will also say that I thought the Fed should have eased back on the policy gas pedal a little bit earlier. But things came together in ways that people didn't expect. And I guess there's some possibility that they improve in ways people don't expect. You could have people come back to the workforce. If you don't have another virus wave, maybe you don't have another supply problem, and we can catch up in the ports and other places. I think that's possible. I do think the Fed needs to do the policy tightening it's going to do. But at the moment, it looks like it's going to do. If you look at what the futures are priced at, it's not going to do much more, at least initially, than it would otherwise do if it was normalizing policy. You're going to get to 1.25 by the end of the year in the current pricing right now. That's not that bad.
Shepard Smith here. Thanks for watching CNBC on YouTube.